Hey, what's up everybody? Today is September 14th, 2015, Monday, doing another Monday market analysis. This is Trader Tim from E-mini Mind, and not a whole lot has changed since last week's video. Actually, last week, Wednesday or Thursday, I put out the video. Um, and I don't anticipate a whole lot changing between now and this coming Thursday, being the FOMC meeting announcement. You can see that we have a 50% retracement short at 1982s on the ES, and the 50% retracement long at 1911s, and we are coming to a very nice, just about as textbook as you can get of a triangle. And so this bear flag, if you will, we would anticipate a breakdown just because the recent trend before the consolidation here was down. But the FOMC meeting announcement will certainly throw a wrench in the mix, and so we'll see what happens. I would not advise trading on Thursday, as there's typically an initial reaction in one direction after the announcement comes out, and then there's a correction, and then usually another reversal at sometime in the next 15-20 minutes after the announcement. So things can get super volatile. The morning is typically dead. There's not, the market's just barely moving. So I typically do not trade the FOMC meeting announcement. But following the announcement, in the days and weeks and months following the announcement through the end of the year till about the middle of December, I would expect some very, very good trading setups. So I would expect the two scenarios that we have from this apex here would either break down or break out. And so the long at 1891s is the failure, and the short failure is 2018s. So I'd be looking for a break of one of those to kind of initiate a move. And if we do get a move lower, I'd look for us to move. If you look at the range that we moved from the last apex here at about 2080s down to lows was about 1830s. So you can kind of take that range, if you will, 2080s minus 1830s, and that's a pretty substantial move from highs basically down to where we were. That's about 250 points. So it is certainly a potential for us to move down another 200 to 250 points. But at the same time, we'll be looking for not only the break of this swing low, a break of this 61.8 rather, but the break of this swing low back here at 1813s. So caution going into Thursday, and we'll wait and see what happens. If we move to the upside, I would see us going back to 2035s and potentially a push into the middle of this range up at 2080s, and then some resistance or some pushback from shorts from bears at this point. So those would kind of be the two scenarios, breaking one direction or another. And since there's not a whole lot going on, I guess we'll just touch on the VIX real quick. Great trading here. Great trading ranges because of the VIX right in this 25 level. My favorite number on the VIX to be actively trading. But I thought what we do is just kind of take a look at some of today's trades. So if I go to a tick chart, I'll put it on just today's trading, and put it on a Hakanashi candlestick. So last Thursday we had rollover, and so coming into this week we are now on the December contract for both the E-mini and the 6E. Not a whole lot going on the 6E today. I'll get to that in a minute, but first we'll talk about the ES. And so, one thing that is important, if you're looking at a small 512 tick chart, you can come in here and you can kind of take every 50% retracement as they happen. But I like to at least pull back to a 15-minute chart and kind of look at the context of where we're at. So I give the markets a little bit of time to kind of settle out, a good 15-20 minutes in the morning. And so if I just came into the markets today, I would look at this long 15-minute that we have just on the, basically a 2-day chart. And that's just, pulling from lows to highs. Let's see if there's some sort of reaction. If we were back here on the morning, I would look for us to be coming down into the long and looking to take a 512 setup at the long, if that makes sense. So if I zoom in here, rather than just taking a blind limit because we're in such a choppy sitting between two dailies on the 250% on the daily chart, going to the 512 chart and waiting for this exact setup right here. A swing high, putting in a low at the 50% long, and taking the first 512 tick after the 15-minute setup. Putting your order one tick in front of the actual 50, or round, in this case, rounding up and adding a tick, and then getting in the trade and either taking it to the negative 23% target or an arbitrary target, or just trailing the next 50% and putting your stop underneath the 61.8 and then letting that 512 tick go to its target and move past, and trailing the next 61.8 until you get stopped out. And so, rather than taking blind limits, using the 512 tick at the 15-minute level is a very good way to kind of limit the trades that you take in the morning, because you really could take a dozen trades in a couple of hours, but rather than just take every single setup for 4 to 6 ticks, being a little bit selective is okay. So we came into the long and we're trading higher. Well, now the first thing I'm going to do after we start moving higher is to draw the opposing and see if there's any resistance. And indeed, there was some resistance. And so now we are sitting between the long and the short, just like on the daily. And you can see up here that we broke above the 50% short 15-minute on the day. And now we're 9:30, 10 o'clock, so things are typically starting to slow down. So because we broke the short, I would not be looking because we broke the short here on the 15-minute chart, I would not be looking to take a short at highs. I would be looking for the market to pull back again and take another long. And indeed, taking the long here at 43s, expecting it to go up to 1950s. We did not get that, and it was just a matter of kind of letting the market drift a little bit in your favor, and eventually getting stopped out on that long. But it, identifying the opposing short and seeing it break prevented me from taking the short up here. And in this example, the short did end up working, even though it was a little bit dirty, meaning even though it went into the 61.8 just a couple of ticks. On the whole, if you trade the same way every single time, wait for a setup to come down into a 15-minute, take a long at that 15-minute, draw the opposing, and wait for that break to confirm a push in that original direction, you'll be taking higher probability trades. So, as we went into the afternoon or lunchtime afternoon, things got really choppy. That's typically when I, peace out for the day, so to speak. But that's kind of what I was, what I was seeing here in the morning, and how I was trading, very small time frames, but keeping my eye on the larger 15-minute as well. And I'll continue to do that as we're in these higher volatility scenarios. So if we look at the euro, not a whole lot going on. This morning, I like to take the first setup. So like on the ES here, this was the first setup. We were trending down, and the 512 tick was the first setup at the long. And you'll notice that the long, was basically on the 512 aligned with the 15-minute. So you have the 512 and the 15-minute basically at the same level. Very powerful setup. So this morning on the euro, seeing these setups trading lower, this is really early in the morning, 4 or 5 o'clock Central Time. And so as the market drifted lower and coming into the day, seeing, okay, we're just before the market open, if you will. But seeing that we've gone down one, two, three legs, I would typically wait for a move in the opposite direction, and we really didn't get that until later in the day. And so, letting the market kind of come down and not look to take shorts as we're down in this range here, because so now we've got one leg, two leg, three leg. This is the fourth setup short, and you can see how that one failed. And then we ended up, getting a little bit dirty up here and then trending lower again. But the setups are not as clean as you drift away from the first and second setup. So not a whole lot to do on the euro today. Let's say we came into the day rather, and the market, let's see, find a better example of what I'm kind of highlighting here. Yeah, no really good examples in the last couple of days just because futures roll over. But, looking for the market to kind of turn around, if you will. This was about lunchtime, and if the market would have so we've got the swing high break over here. We put in a low. We broke the swing high. Well, the market didn't pull back into the full retracement, and this was already midday lunchtime and things were really slowing down, but that would be more of an ideal setup that I'd be looking for. We're trending down, and then I'd look to take the first and second setup in the new trend, trying to get into the trend early as opposed to trying to take a short down at lows late in the game. So that's kind of my mindset behind taking these smaller time frame trades, but also being aware of what's going on in the little bit bigger picture. So I hope that was helpful. If you have more questions, as always, feel free to shoot me an email, tim@emoneymind.com. Thanks, and have a great week.